Well, hello everyone. K Kim here, and thank you for tuning in for another session or episode or show you wanna call it. Live midweek update here. I know market continues to see volatility, and this whole year has been very volatile. This whole year has been probably one of the most difficult year for most everyone, I'm guessing, and frustrating. And you know, S&P 500 is up only about 1.2% year to date. So it's just nobody's really making money. If anything, a lot of people are getting slaughtered just with a lot of its volatilities that we're seeing on the market. Again, because of the volatilities, there's been a lot of fear and you know, a lot of talks on the market top, market correction, market crash. You know, all of that. But you know, just to be fair though on that, there's always been a market top, you know, correction, crash talk, always, right? Regardless of what the market does, the market's up 23% all year long, and then you know, it's not sustainable, it's bubble, this thing is gonna correct because you know, you can't go this much, it's too extended, and then the market does 1.2%. Well, the volatility is signifying or insinuating market crash. There's always opinions, there's always feelings, there's always fear, there's always people saying stuff. And so that is the reason why I do not pay attention to not even my own emotion, you know. And I think that's the only way to truly be successful in this business consistently, because anybody can come to market and just get lucky in 1 year, right? Anybody can come to market and get lucky 1 year. Anybody can come to market and get lucky for 6 months. The key is consistency. Anybody can be bullish when market is bullish. Anybody can be bearish when market is bearish, right? That's what people do. When Apple goes up, everybody accumulate bullish argument, and now this why is bullish because of this, and this why is bullish. And then when Apple comes down, we're gonna bring in, you know, because of Samsung, because of this, because of that. We're gonna bring in all the bearish argument to support it. How do you live your life like that? If it's bullish, we're bullish. If it's bearish, we're bearish. It's going through roller coasters every single day. That's not how to trade the market, right? So I'm still long on Apple. We'll talk about it. Actually, we're gonna start with Apple today because I know. Just I get a lot of questions on Apple, and everybody's talking about Apple. Everybody's thinking about that this could be the September of 2012. You know, when Apple crashed, it looks a lot like it. It does not, and it does not look like it. I'm talking about it. It is completely different than 2012 September. If anything, I think I said 2011 June. So we'll go ahead and start with Apple. Thank you very much for showing up. I'm gonna try to do these events on a weekly basis. You know, I've been just more free in my time, so I'm gonna try to do these more on a weekly basis. The live event. If I'm busy, I'll put out video or something like that. I know yesterday I was busy, so you know, I said we're gonna do it today. But again, thank you guys for tuning in live. Again, for you guys that are watching a recorded version, that's cool as well. So if you have any questions, if you're here live, if you have any questions, you can always use your left panel to ask any questions. I made it public, I made it private, so nobody else will see your comments or questions. So please don't feel that it's a stupid question or nothing like that. So let's go to Apple. Sharing my chart. Make sure you are seeing my chart. Yes, you are. Very good. Very responsive. All right. So let's talk about this. Let's talk about this, right? How many I wasn't watching it yesterday. Do you remember my last our last show? We talked about this. There could be a V-shape higher, or it could be a double bottom. It could be, and as of today, we don't know which one it's gonna be. I mean, it could be just flop before doing this. There's a lot of chance, a lot of different things can happen. But if you were watching intraday yesterday on Apple, and when this thing started tanking, this is where a lot of people got stopped out. This is where a lot of people got stopped out. This is a lot of people got stopped out here. So this is where it will pretty much wipe out all the people there, because that's where the stop is at. It was hard to hold. Yes, it was hard to hold. I actually wasn't watching. I don't trust my emotion, so what I do is I just watch towards the end of the day, and then it saved me from being emotion, and that's kind of what I recommend you guys to do. Especially when the market is this volatile, it's not worth to just sit there and look at the market and just let your emotion work it up, and you just have a bad day. It just is not worth it. I really, something that I always say is, it's not worth it. Your happiness is based on the performance of your positions. It's not fair for you. It's not fair for your friends, fair for your family. This is just job. When you come here, this is what you do. You lose your money, you lose your money. You win your money, that's it. It can't be based upon your happiness because of Apple's doing well. That's just not fair. But anyway, so yeah, I mean, this is where a lot of people got stopped out here. A lot of people got stopped out here yesterday. And a lot of people probably initiated short. Some are about here too as well. So there's a lot of money trapped in here at this point. Obviously, I'm still long in it with my positions, and I do want to say this on Apple. I do want to say that this is a dire situation. This right there, this might be the last hope that we have for the buyers. That what you're seeing, that candle, that big candle with a long wick, that is the last hope, I think, for the buyers. This could, I'm not gonna just assume upon the market and say this is a bottom, because I do not know that. I will start to say that this may be the bottom if we can stay above 119, 120-ish level, and then maybe get to this gap area, and then pull back, and then gets up, and we create certain inverted head and shoulders type of formation. This will be a reversal confirmation. We get up here. I do believe that that's a reversal. Full there will be a confirmation. But I guess obviously we still have a lot of work to do. But if this thing closes below 109.30. If this thing starts to get below this boxed area right here, this is where I'm gonna start thinking about closing my positions, all of it, and take a loss. This is where we would have to accept it. This is where if this gets there, and obviously I can't just tell you, well, I can't tell you if he gets 111.36. I'm gonna close it out. I have to watch it. I have to look at it, see how it closed, what are the behavior of the market. I have to look at it. There's a lot of factors. I don't go by just mathematical rule where if it gets below 111, I'm out. There's a more factor that involved, at least in my system. I mean, I'm sure everybody has a different system. Everybody has a different philosophy. I hate when it stops me out and then this thing moves, it rallies. And how many times did it happen to you guys? It stops you out, and then this thing goes high. I mean, this thing rallied. This thing just rocket, like just goes. How many times that? I hate that. I'd rather be completely wrong. You know what I'm saying? And if there's any consolation to you guys, with those of you who are holding long on Apple, things can happen. I'll give you some example. Lionsgate. I know it's not entirely same, but actually it was worse It was worse than Apple. Here, this is like one of our examples, and it pertains to Apple because I wanna tell you guys it's a psychology of the market. Market is gonna wipe people out. Market wants to wipe everybody out. All the unseasoned trader, all the weekends, all the newbies, all the people who think they know what they're doing but they don't. All the people who are emotionally not stable. All those people are gonna get wiped out, and this market is designed to do that. We went long right about here on Lionsgate. Okay, because what are we looking for? We're looking for higher lows, higher highs. They had an inverted head and shoulder, and we were looking for that. Okay. Again, I'm not doing analysis in Lionsgate. I want you to learn how the market is designed to wipe people out. And then we get this gap down. I don't know if that wasn't earnings. That was not earnings. It was some kind of a bad news. Okay, I forgot what it was. Some kind of bad news came out, and then we did this, and then guess what? Oh my goodness, okay, we have a massive head and shoulder formation. We got a gap down, lower high, lower lows. This thing is done, right? This thing is done. And again, I'm not using this example saying that's exactly what's gonna happen on Apple, but if it does happen on Apple, I want to make sure I'm going to be part of it. I want to make sure if this stops me out, I'm going to make sure I'm going to become completely wrong. Right? So this is like, we're freaking, I mean, I'm not freaking out, but some were. And then I'm like, hey, we're seeing a primary term uptrend. We were, obviously. And hey, yes, we got head and shoulder formation, but it could also be inverted head and shoulder. Which is it? We don't know. We do not know which one it is. There's time. You know, the thing about it is, you know, everybody would speculate. Oh my God, there's head and shoulder. Oh my God, it looks like September 2012. Oh my God. Wait until it gives you full confirmation that it has been reversed or it has been confirmed, or you know what I'm saying? You know, don't assume things. That's what people do all the time. When we have this kind of sell-up, does it indicate someone is dumping large position? Probably, yeah. I mean, it's mostly, I don't really truly know about that. I mean, yeah, somebody's dumping, or the Mer Institute is dumping on Apple. All we know is that people are panicking. That's what it's saying. Is that people are fearful, people are panicking, and that's a lot of times, you know, what happens. But that's why I want to stick with primary terms. So anyway, so let's go back here, and then I decided I stick with it. I want to decide I stick with it. And look at this. Can you see this? What kind of crap is that? Like, and then let's say everybody gets stopped out here. Everybody just panics, and then you just get stopped out, and then it does that. You know, that kind of stuff happens a lot. We have other positions. I forgot which one another one was. You know, we talked about General Mills was another one. General Mills was another one that we're in. We're long. I believe we went long. This was not as dramatic, I guess. We're long summer here, I think, and then you pull back, and then this is where, like, oh my God, head and shoulders formation, and we confirmed. Left shoulder head, right shoulder, confirmation. That thing is going down. Right? Well, you know what happened. I give you another example. This one's we're currently in. Pull T group. We in long right here. Gap down, earnings. And then we just confirming invert head and shoulder right there. We held through. We held through all of this. So I'm giving you these examples that were pre-dramatic. You know what I'm saying? Like pre-dramatic, and then they rebounced. This thing took about 4 months though, and looks like this thing could potentially now gap back into an uptrend, right? So let's go back to Apple. If I'm gonna be wrong on Apple, I want to be completely wrong. Like, I want to be completely wrong. But if this thing goes up from here, I want to be part of it. Because I still think that there's a possibility that we can salvage this position. Because I'm still thinking that we're still in a primary term uptrend, right? And I'm keep going back, tell you guys that this does not look like September 2012. It looks more like June 2011. And I'm just showing this to you guys again. Just imagine yourself what this looks like today. What would you feel if this was today right here? Like, what would you say? What would people always imagine what people be saying at this time, and just compare it with what people are saying right now, right? That's why I don't listen to what people has to say. So Apple, if we can get about 120, that will confirm a double bottom, and that will be initial confirmation of that double bottom. We'll need something bigger than that, inverted head and shoulder. Right now, what we have going on is on Apple on 65-minute chart. Sometimes I bring this up. We have what we call bullish divergence on the 65-minute chart. This is a 65-minute chart, so I wouldn't put like so much weight on it, but it could be that small fire. It could be that small fire could ignite this thing. It could be that catalyst. So we have a so what the 65-minute, what is a bullish divergence? Is what it's saying is basically there is clandestine buyers in here. The buyers that down here are the value buyers, the buyers that think that this is a pretty good level. This is 115. They feel that this is cheap at 115, and these are the people who feel value at this point. But a lot of times these guys, a lot of people, there might be also people that are very short term, like they want to go long here and they place stop right there, so they're very short term. So this is where things get pretty volatile, because we got a lot of short term people just thinking, well, maybe this is there are a lot of people who want to just call this bottom. Yeah, we'll talk about you know, the market. I want to start with the Apple first though. If 104 holds, it could still rally. No, you know, when we get to 104, if we get to 104, guys, Apple isn't gonna be on very, very difficult. This is going to look like 2012 if we get to 104. I know you might think that, well, it's 112, 114, what's the big deal? It's a huge deal in technical analysis. Why? Because if this thing comes down to 104, and there will be rally, but it won't be enough. You know why? Because we're no longer in an uptrend. We're now putting equal lows. We go up, we go down. Now we have this is what I call monster. This is a level. You know how they have like tornado levels, F7 or whatever? This is a level where this thing can actually crash Apple again if we get to 104. So this is a dire situation for Apple, for everything. And obviously anything can happen. I mean, you can't just go straight up. But as far as the probability is concerned, you do not want to get to 104. Apple do not want to come down to 104. Apple want to stay up here and bounce up here. You know why? Because that is still considered as higher low. That low is lower than that low. This low is higher than this low. We want to continue with higher lows and higher highs because we got to go back to elementary of technical analysis, right? What is definition of uptrend? Higher lows, higher highs. Look what happened to Apple. Equal lows, left shoulder head, right shoulder tankage. Right? We also had a head and shoulder inside of that with a bearish divergence there, with the island reversal, evening star reversal monthly. So I mean, you had a lot of stuff happening there. So if this thing comes down to 104, yeah, now we're gonna start to look like 2012. Now we're gonna start to look like 2012 if it does. So you do not want this thing to come down to 2012. We want this thing to move up here. As far as a sentiment is concerned, let's talk sentiment, like current sentiment, right? Obviously it's bearish. It's bearish in the minor term. It's in the intermediate term. We are neutral to bearish in the intermediate term because we have gotten below this major level. If we would have stayed up here, I would have said neutral to bullish, but we're down here. So we're a bit bearish, neutral to bearish. Primary term, we're obviously bullish because primary term, we're talking about primary, right? Primary. And we got this some kind of support going on here as well. This long-term, primary term uptrend is going on here. So this is ideal level if you want to continue with the primary term uptrend. And if this thing actually gets up from this point on, I want to assure you that there's high probability. Again, I don't presume upon the market. I don't know anything for sure in the market, but there's a high probability. If this thing actually is the bottom, its thing will be furious. The buyers will be furious and we'll have a pretty fast up move to the upside. And what's going to happen is majority of people who got stopped out several times here trying to call the top or whatever, they will be too scared to get in. And once this thing keep moving, and then finally those people who got stopped out at the top, or at the bottom, they're going to try to get in at the last minute, and then this thing pulls back. That's how this market works. And you've been there, right? But as of right now, we're in a dire situation. I wanted to hold 109. We can't go any lower than that. If we go below 108, 109, we're done. At least I'm going to be out. At least I'm going to be completely out. So I think this is going to be the last chance for the buyers. And we got to make something out of it. 65 minutes bullish divergence is a tiny hope that can lead to something bigger. Tiny hope that can lead to something bigger. We had bullish divergence here as well. Not so much, but a little bit. And then we had that little bit of rally there. And we also talked about weekly chart, right? I know I had questions regarding this line there. Is it a 20 SMA on the weekly? That's a 50. Yeah, that's 50 actually. So 50 SMA on the weekly with a question regarding that because we got slightly below it. I wouldn't be so obsessive with being slightly below it. What I would look at is that we're still rising. It means we're still in an uptrend and we're trying to stay up here. And this week, we're Thursday today, Thursday? We are Thursday, and right now, as of today, we have what it looks like a doji or high wave spinning top candle that can potentially be a reversal. Don't you think Apple is owned by too many investors? I see. I don't know. I don't know how to answer that. I wouldn't know if it's owned by too many investors, or you might be saying it's too popular or too many people are looking at it. Yeah, those kind of are speculations, are their own opinions, and I will not take that into account in my analysis. That hey Kay, gotta head out to watch your video tonight. I was supposed to thanks again for through in the door and I learned. Oh sure, very welcome Joshua. We'll definitely have the recording there for you. So I have to. I don't want to spend too much time right now, but first things first, to watch the level next week or this week and early next week would be 119 and 120. We must get above 119, 120, and we must stay above it for at least few days to sustain this as new support, and then keep going higher, and then hit that gap area. Two things can happen: either it fills the gap, or it gets to that gap area and then fall. And then what we want to see is this thing creating a higher low. If we can do that, if we can at least get to the higher low, then something is happening here and something is cultivating. And if we can do that, this could be possibly that bottom before rallying back up. When we layer your monthly charts in the stochastic magnetic crossover, I guess kind of look like what back drill. Again, you know, it's look like, I guess it kind of looked like the back drill as well too. Oh, you mean 2011? I thought you said 2012. So, we were talking about weekly or monthly? Let's see. Monthly. Yeah, so that's kind of what I'm talking about here. Let me transition into Spider because I actually want to talk to you guys about that. When we go to oscillators here on the Spider, actually I want to talk to you about it. This is a monthly stoke. So we're going to transition into Spider. But what Mike was talking about is are we talking about here? June? Actually, it does not look like June, bro. You want to put all of that, MACD and RSI? I mean, yeah, it could be. Yeah, it could be. But you know, I wouldn't put too much weight on. I know a lot of people. A lot of people are watching. Is a lot of people are watching this MACD cross. That's what they're watching. But what people don't understand is also these things can do this and continue. So we need a substantiation from the price action. I don't want to explain this because I think I explained this before. But what I wanted to get to it was on the Spider stochastic. Monthly stochastic just had a cross right there. You can see this is a Spider. I know that's not a whole lot because obviously, you know, we want to see some substantial, or we want price action to substantiate that. But what I'm trying to get is, a lot of times what they do is they go up, they pull back, and then they stay at the top of its channel, right? Like this. And they usually kind of go back and forth. That usually, a lot of times, it just means continuation. Right? They do that. They come down a little bit and then they start to cross back over. These are the reasons why just because these oscillators are crossed, that does not mean that it is the stock is going to roll over. They can be crossed and then they can keep doing this like this. That's why I always say, just because we have a MACD cross of monthly does not mean that this market is going to roll over. Though it could be certain concerning signal. But what it really is saying is we are getting into the extended session, kind of overbought session. Overbought does not mean that it must roll over. It just means that, you know, let's watch what it does from this point on. Because what it can do is it can continue to grind higher. And it can, you know what I'm saying? It can continue to be at overbought status. Because if you look at last 2004 all the way to 2007, for about what 4, 5, 6, 7, about 3 to 4 years, we're at overbought for 4, 5, 6, 7 years. You know what I mean? And so nobody truly knows how long it's gonna stay there. So when we look at Spider, you know, monthly chart, obviously, you know, with that cross, it could be, you know. And then obviously Spider could possibly continue. And looking at a monthly chart, it does look like a possibly bull pennant, but who knows at this point. But let's go to S&P 500 here. What time is it? So, okay. So looking at S&P 500, let me go primary term here. we're still in the vicinity of primary term uptrend, right? So forget, first of all, forget the volatility, forget the sideways movement, forget the speculations, forget the opinions, forget what people are saying, forget your emotion, forget everything, and just look at this and say, let's give benefit of doubt to the buyers in the primary term, because we're still in the vicinity of higher lows and higher highs, right? We're still, the primary term trend still in effect. The trend is assumed to be in effect until it gives us a clear signal that it has been reversed. Do we have a clear signal? As of today, we do not. So let's get that out of the way, and let's go get into a minor term. And I did a thorough analysis last week, giving you an example on the Russell 2000, why I think this inverted head and shoulder can be significant formation for possibly turning things around. You know, things got actually pretty hot, like pretty heated right here when, actually move this a little bit, when this thing came down right here, and then we went up, we came down again, and then you see how many times we hit this level and we're just keep finding some kind of buyers in this vicinity, right? We're not coming lower than this. If we look at line chart, you can clearly see we're cultivating higher lows. And you could say, well, okay, we're cultivating lower highs as well. Of course, yes, we are. What is it gonna be? I don't know. Just like remember I told you about Lionsgate chart. Remember I looked at it, and then there's head and shoulder, there's inverted. Which one is it? I don't know. I don't want to just guess which one it is. I want to find out. I want S&P 500 to show me which one is it. And then if it tells me it ain't the inverted head and shoulder, you're wrong, this thing is rolling over, then I'm wrong, I lose money, I get out. What I'm not going to do is I'm going to start just guessing at this point because I'm fearful. But it gives a little bit more weight to the inverted head and shoulder theory. Why? Because we're dealing with primary term uptrend. If we're dealing with like downtrend or correctional mode, then it favors more of a downside outcome. Because we're dealing with primary term uptrend, it's gonna favor these kind of patterns. It favors to the upside. And obviously, this pattern is not confirmed. We need at least to get above 210.62, and we have a bearish downtrend right here as well. I mean, it's crazy what he's been doing here. All right. So we also have 65-minute chart bullish divergence right there. Higher lows on MACD, stochastic, and RSI. Do you guys remember how we bounced right here? Do you guys remember that? I wrote an article on it right there. Do you guys remember? Let's see. Let's see if I can find it here. Oh, tiny sparks. July 11. July 11 was right here. Right here. So that was a weekend, so it was right on this day before we got gapped down. And I'm not trying to show this saying I called it or nothing. That's not what I'm trying to say. I'm saying probability, get benefit of doubt. Let's just say, right? This was July 11, right here, and then we bounced that, and we talked about it. So we had S&P 500 bullish divergence. We have Russell 2000 bullish divergence, NASDAQ bullish divergence, financial sector bullish divergence. We also had transportation bullish divergence, and same with Dow Jones and New York Stock Exchange. And that was that tiny spark that I talked about can lead to something. And we are having that again right now. And I have to say July 11 was a little bit stronger one. So I felt the need to write that article. Right now it's not as strong. I'd be honest with you, this was much stronger right here. July 11 right there. That was a much stronger bullish divergence, more clean shape. This is a bit more messy, sloppy, so it's not as strong bullish divergence, but I guess it will be better than nothing. So still there's a lot of obstacles. What the bulls need to do, we need to get above this resistance. With today's doji, it just kind of don't know where it's going, doesn't know what to do. We're just kind of undecided. You know what, another scenario might be we get stuck here for a little bit, and then either it breaks out to the upside or to the lower to the downside. What the buyers want to do though, they want to keep this momentum going at least last few days. So if they can have another bullish day next few days, if you can get about 210.62, that will be an early confirmation, of the invert head and shoulder. And then obviously you want to do something like that. Full confirmation is clearing about 212.81. So it's gonna take some time, and we'll look at it next time how it plays out there. Let's go through some of these indices quickly, and then we'll look at Tesla. We'll end the video today, or session today. Tesla is still, not Tesla, Russell is still, at the important level, right? Russell is starting to really break down actually because of what we actually cultivated this minor term downtrend type of deal. Kind of looks more like a smaller version of this, like right here. That's what it looks like a smaller, like intermediate term version. This was like a primary term version, and then this is like an intermediate term version. So then that's concerning. But then I always do my analysis in all terms: minor term, intermediate term, primary term. Primary term we must give respect because we're still in a vicinity of what? A higher low and higher high. So we're in a lot of these indices are at a level of dire situation. But like I said, this market loves to do that. This market loves to just push everybody. We also have a bullish divergence 65-minute chart on the Russell as well. A lot of times when you have bullish divergence on 65-minute chart bullish divergence on Spider, you probably have bullish divergence on all indices as well. This is Russell 2000 right now. You can see this is a bit more stronger version, I think. But you can see we have bullish divergence right here. 65-minute chart. Again, it's a tiny sparks, can either be nothing or you can spark something out. As for Russell 2000, we're looking at IWM here, so I'll talk about levels. First things first, what we want to see is something like this. So we need to get above 213 there, 213.12-ish. If we can do that, probably we get up, we might find resistance, pull back. But when it pulls back, important thing is it doesn't want to come all the way down, make new lows. It pulls back and stops short, and then creates a higher low and get up, and that's how it cultivates uptrend. So actually, Russell's concerning, but still at a good level in my opinion. But it's just concerning because we do have my intermediate minor term downtrend happening. Nasdaq is very strong. We have no such a thing. In my opinion, there's no concern at this point. Nasdaq and financials. Nasdaq is the only index out of all the indices we look at. Is the only index that has no concern whatsoever. There's no topping pattern. There's no lower lows. There's nothing. It's just that we're still cultivating primary term uptrend. And weekly term is fine, monthly term is fine, everything seems to be looking fine. And also we have bullish divergence type of deal on the Nasdaq as well. Not a strong one though. It's not strong like June or July, but we are having that as well. Kind of like that, when I wrote that article, tiny sparks. We're kind of in that area with a little bit of less strength on that bullish divergence. Finally, financial sector, we have some crazy shenanigan happening just a couple days ago. You can look at this. What the heck is that? I do not know. But good news is it stopped short and created a higher low. And that's always a good thing because we've been creating what? Higher high. What are we doing? We are cultivating an uptrend, right? And also good news about financial sector is also got up above this strong high there. So financial sector, Nasdaq, we have no concern, we have no topping pattern, we have no, downtrend cultivation. Really, Spider is concerning, Dow Jones is concerning, Russell though it is concerning a bit, but we're still holding this important level. But that's what I'm talking about. If you want market to crash, you want to see financial topping pattern. You want to see Nasdaq topping pattern. You want to see Russell topping pattern and Spider topping pattern. Every single indices having a topping pattern, and that's not even enough because we're working with a prolonged uptrend. We need an initial confirmation that turns into a full confirmation. And so it's too early to start freaking out. That doesn't mean that I'm right and we never have we're not going to have top. It could happen. I'm just saying I want to be completely wrong. I want to make sure that I'm completely wrong before I get stopped out of my positions and take a loss, because I've seen it so many freaking times that it does something and then it looks like it was gonna do something and then it stops me out and then it moves up without me, and that kills me. I hate it so much. And so if Apple is gonna roll over, I want to make sure that this thing is gonna really gonna crash or correct. That's what I would want to see. If anything, this is a good level to short somewhere about here. If you want to anticipate, you could possibly go short here on the bounce. A little bit riskier up here than down here. You also want to look at, make sure, look at your indices and stuff like that, because we could have a formation. That's another thing about Apple is if market is not rolling over, and if let's say this thing does this and do that, oh, then fake everybody. We got the left shoulder head, right shoulder, inverted head and shoulder, boom, and we can, that's also another scenario. So this is not the market is, unless you're very, very quick, like you're just gonna trade for a couple weeks or a couple days, but you want to position trade short time, to the downside, that's not gonna work, or anything longer than like a couple weeks. So this is not the market to short, anything longer than a week, because we're not rolling over, we're still holding up. So again, 65 minutes bullish divergence. So it's interesting to note that we have every indices have 65 minutes bullish divergence, and this is a strong bullish divergence though. This is strong. Look at the angle of this. This is not like Spider. This actually is a very, very strong bullish divergence on the 65-minute chart. So it's like an hourly chart, right? But we need substantiation from the price action. Once we get above 120, that will be a confirmation of that. And we have all the indices also forming this 65 minutes bullish divergence. So we do have a tiny sparks that can potentially lead it, but we are in a dire situation. This guy right here is trying to hold this weight on his shoulder and trying to push it up. That's what he's trying to do. So we have to, I want to see if the buyer is going to come and help this guy right here, yesterday's candle, and support his cause. But I do think that might be the last hope. All right. So any questions before we go to Tesla, and then we're going to wait? Is there a question there? Can you look at ROST and DHI? We'll look at that. Does the potential dead cross 50 DMA crossing over concern you on Apple? Could happen soon. Let me look. Let me look at it. 50 crossing. Oh, so yeah, there's a 50 right here. There's a 200 SMA here. When 50 crossed that 100 SMA, that was a concerning matter right there already. So at this point, I don't put too much weight on there right now because it hasn't done it. But when 50 crossed the 100 SMA, that was a concerning, because we haven't done that in a really, really long time. The 50 and last time when 50 and 100 crossed, it was right about here. But we kind of got back up above though. When 50 and 100, when they got united, it was here. And then we stayed here for a while. And this is another thing that I was talking about actually here at the club. And one thing I talked about is this. Even when we go back, this is what I'm talking about: speculation, fear, emotion, all that shenanigan. What I'm talking about is this. Look at this. This is back in what, 2014, late 2013. We got a left shoulder here, right head, right shoulder, you know, it's kind of like leaning, kind of awkward looking, and we got this huge earnings gap down. We made a lower low. This looks like this thing is gonna go to nothing. That looks like a major topping pattern. Not only that, it'll happen in the middle of, I believe this is a 50% retracement. Pretty close. I mean, this was a 50% retracement. What I'm getting at is, actually, yeah, a little bit above 50%. What I'm getting at is, Fibonacci retracement says, as long as we're below this level, this thing can still be considered as a primary term lower high. And we can make this humongous, like, primary term downtrend session. This is why if you don't use your technical analysis correctly, you're just going to be fearful all the time. Left shoulder head, right shoulder, confirm, earnings gap down. We made a lower low, right? And there was a lot of, you know, fear there. And then we got up, we came down again. We started creating resistance here and creating lower highs with lower low. And then look at what happened, right? So what I'm saying is, if this is gonna happen to me right now on this move, I want to make sure I want to be part of that move. If it does reverse on me, otherwise I want to be completely wrong. That way, if this thing has no chance of actually going back up, actually this thing is just gonna roll over. Because this kind of stuff happens. Same with the Russell. I'll give you this example. Right, look at this Russell. Right here. Right? We got left shoulder head, right shoulder. We got a correction there, and then we had another left shoulder head, right shoulder. Where is the correction, right? We're looking for the correction, maybe and fill this gap right here. You know how I know that? Because I kind of trying to short that. This was back in 2013. I trying to short that. It didn't work out for me. So there's always these speculations that never play out. This is a reason why this head and shoulder doesn't bother me, because it hasn't confirmed yet. ROST. Actually, let me look at Tesla first, and then we'll look at that. Any questions so far though on Apple or on anything? TLT. We'll look at that as well. Well, that's a 20-year. What's a 30-year? Is it 10? Which one is 30-year? Are you talking what? You talking about 20-year? TLT ZBS. ZB don't work, but we're talking about TLT though, right? Okay. Yeah, we'll look at that. So let me go to Tesla first. So now is because I've been talking about Tesla, and I know, you know, I've been telling you guys that I don't want to be involved up here. I want to see a pullback to 50%. Again, I'm not trying to say I called, because I didn't call it. I didn't say that this is going to happen. All I said was I'm not going long. I'm not going to go long on Tesla until I see a pullback to either 50% or 100 SMA or in this vicinity. And the problem is though, am I going to go long here? No, I need to see a confirmation of a bounce. And because we're dealing with the gap and we're dealing with the double top, it's almost like a head and shoulder double top type of formation along with the gap. This isn't one of those more of a tricky setup. So this is one of those things that I really don't want to go long until we fill this gap, right? So because I mean, you might always think that, well, okay, why don't we go along here so that you can ride that move. I want to make sure we cultivate an uptrend, right? Because what it can do is it can go up, fill the gap, becomes a lower high, and then do that. High, lower high, lower high, and then it continues lower. I cannot work with that. So obviously, if this thing is going to cultivate primary term uptrend from this point on, this is kind of move that you will work with on Tesla, something like that, because that's how it moves. See how I'll do this, do that, do this, do that, do this, right? So that's kind of what I'm thinking, is that's what I want to go long, but I want to make sure that we are cultivating uptrend there. So if there was no gap, then, and if there was no double top type of deal, and this thing just was a straight down pullback, it would have been much easier setup. What you would look for then, you would look for some like either double bottom or invert head and shoulder. You can even look at certain candles here. But because we're working with the minor term topping pattern, and because every time when there's a gap involved, things get really hectic. It just gets a lot of, it's almost like people get confused below gap or in gap area. Like it's just like they just go crazy. Maybe not. Maybe you'll go straight up, but I'm talking about more of a probably. Right? So because of this gap, I would feel comfortable considering going long if I see something like this, it will be very ideal, but it's never gonna do the way I want it to, and then your entry will be right here. If it's a perfect setup, doesn't mean it's gonna happen, right? Then your entry will be up here, 1270 or something like that. At least that's where I'll be thinking to go long, because we got this move, we pull back, we can expect another move higher, because I want to look for high probability setups that it's gonna have high probability of working out. I don't want to guess things here. I don't want to guess that this is bottom, because it could just do that. So I'll continue to watch that. We'll continue to talk about it. Let's go to ROST stores. ROST stores looking good actually. This is more of a good swing trade setup, I think. I don't want to position trade a whole thing 6 months, but this is a good swing trade setup. We kind of have what it looks like inverted head and shoulder going on there. We cleared this resistance, so it's pretty good. I would continue to watch that. You're probably can do some Fibonacci retracement deal. Let's see. Because of the gaps we have here, it's a little bit difficult to, I guess I'll put it somewhere in there, and probably your next target maybe even here, something here or here in this Fibonacci retracement zone. Definitely not the level to chase though right now, but if you gone long like on this bounce or something, or then this is, if you were to ask me where would I go long, I would probably gone long for swing trading, because I don't swing trade anymore though, but somewhere here, somewhere above 50 to 80, once it bounced off of it and then gotten above that 10 EMA. Here, I'll zoom in. If you want to learn swing trading, this is a pretty good setup. I used to do this all the time. So there's a resistance, right? You don't want to just guess that this is a bottom. You want to make sure it bounced. We did that. And then we held above that 10 EMA. You see that 10 EMA? So these are the level you want to go long, right here, right there. And then you would ride it for a little bit longer and then close it out. That would how you would swing trade. Or you can just go long here and your target is here, more like a couple week swing trade. That's the swing trade as well. So that's, yeah, when this thing did, maybe you could have closed it out some or something. But it looks like we're still in an uptrend and looking pretty good here. This is another example that just because it breaks below primary term uptrend, look at this, was uptrend. Just because we broken below it doesn't mean this thing is going to just completely roll over. We'll get a pullback, but hey, remember it came back up. It came back up. It's going back up because why? We're still in a primary term uptrend. How do you does spikers mean? What do you mean spikers? Did I say spikers? What is spikers? Oh, the long tail at the top. It's a tempted breakout. It's a tempted breakout. It's a tempted breakout. These are the emotional people. Those are the emotional people. Those are the people that you and I don't want to be. These are the people who watch the market all day long, and then soon as this thing cleared this line, they started buying. And then when things get it didn't work out, people start selling, and then they start selling again. So all it was is a very emotional. That's why you want to have a confirmation. What is confirmation of candle? Closing above it. That didn't close above it. So that's basically what that was. It's just emotional people trying to make a run for it. Because a lot of people looking at this resistance and they're like, oh my god, this thing is breaking out. Twitter did the same thing. Right here. We're actually, we were thinking about going long on Twitter. This was our resistance. And I said, I want to make sure we close above 37.30, not just that shenanigan. You see that? This is exactly the same thing. Emotional people, that's what they do. They look at the market all day long, and then they just wait, and we start clearing above, and people are going crazy, and they get in with the emotion, and then with this thing coming down, they get out with the emotion, and they're pissed, and then now down here, some people will be like, get up here, and they're like, well, I'm gonna hold it because, Twitter's good company, and then earnings gap down, and they were down here, and then, and then they sell it here, and then it rallies, they buy it here, come down, and then just whole thing's a mess. DHI is actually good. It actually looks pretty good in the long term as well, not just for swing trading, but this might even be good for position trading. These are my type of setups that I see that there's a lot of move to be made. I like these kind of setups. I don't like to position trade up here because after this kind of move, it's just like I don't know how far it's gonna go. But I can work with after a pullback. I can work with after this kind of pullback. I can work with this kind of pullback. I can work with that. That's exactly what I'm saying about Tesla. I can work with pullbacks. I can work with pullbacks. But what I cannot do is if it is just go, I cannot work with it. I can work with pullbacks. These pullbacks you can work with. But obviously it's easier said than done because when you're pulling back, what is happening to you? Well, how this thing is crashing. This thing is gonna roll over. This thing. So then most people it just can't get in when it's pulled back. When it's going up, they can't get in because well it's gonna pull back. So then they're just like petrified. They're frozen. You guys know what I'm talking about. So this actually looks pretty good. This one actually looks pretty good. Sure, you're welcome. This looks actually pretty good. Is this a housing company? What's DHI? What is that? Home build. Okay, home build. Okay, yeah, that's okay. These housing stocks been home building company. Yeah, these housing companies been doing well. Like we talked about. PHM that I talked about that we're currently involved in. These are the things I can work with. You can see there's a lot of move that can be made. I like these kind of setups because I want to ride this thing for big moves. And so DHI is another one is pretty good that looks like because we cleared this major resistance. We got this like massive inverted head and shoulder going on within an inverted head and shoulder. You see that when you have this inverted head and shoulder within a reversal pattern, that's a really good looks there. So this is actually, I like this one better than ROST stores for my taste. But obviously this is not a level to chase. The best time would have been just somewhere here. Somewhere here would have been a good time to enter, and then place your stuff somewhere down here and hold about 6 months a year. Make sure we continue cultivate primary term uptrend. Right, so this is a good stock that, as far as the technically concerned, and housing market seems to be booming. So at least it could get up some of these levels here. But that will be more of a long-term perspective. But I like working with these kind of setups. So this is, I like this chart setup. I like monthly, I like weekly. This is a more of a long-term type of deal, and you would have these pullbacks, right? All right. So one more. We'll look at TLT and we'll call it a night. Yeah, so TLT, we cleared the resistance, but we still haven't cultivated anything, right? We haven't cultivated anything. We just kind of got this rally. So this is how most people get sucked into it, just going long here. Just because we hit the we cleared the resistance, does not mean that it's going to continue higher. I think we have something similar in Tesla, right? Right. You mean, right here, we cleared that resistance and we threw a topping pattern, right? So it's not always, I mean, times when you clear resistance, it can just go straight up. And I waited it because I want a cultivation of a primary term uptrend. So Treasury bond, we cleared the resistance, but we just went straight up. What I would look for would be more of a certain pullback and then start to form some kind of bottoming pattern, or at least higher low, higher some. But we're still in the vicinity of a lower high, and we're still in a downtrend. Technically, see that? We're still in a downtrend. If this thing falls over here, that's that. We're still in a downtrend. So for downtrend to be dismantled, what we need is what the buyers need is a cultivation. Something that it can work with. Something like higher low, higher high. So this is not my setup. And I still be cautious at this point. And also it looks something crazy right now. Like, could this be something crazy like this and then that? Like, it's fishy to me. Like, it's just like, what is this doing? So all of that, I would not be interested in it, right? Something similar happened here. Like, look at this. What is this? Like, what is that? All this stuff happening. We're still in a downtrend. All this shenanigan, it happens. A lot of times after a rally, it would happen. So, after this kind of rally, we got a lot of stuff happening here, and I definitely wouldn't consider buying it. Anything short, but I don't. Yeah, I don't. It's a short-term kind of thing. And that's it. Any questions on anything? Oh, you're very welcome, Sherry. Well, thank you very much for joining. Well, let me just say this before you go. It's been difficult market the whole year. The market has only been up like 1%, 1.3, and it's been really sideways market. And so, don't feel too bad if you're not doing so well. This is a very, very difficult market, and last few years have been probably one of the most people say that legendary traders say that last few years have been probably the most difficult market to trade they've seen in 30-40 years. So I also kind of look at this more of a kind of a blessing. Why? Because if I can able to handle market like this, if I can able to maneuver, navigate in this, if I can able to understand market in this kind of environment, how well can I do when the market is stabilized? How well can I do when the market is more easier to trade? You know what I mean? Yeah, it's been very, very difficult. So I always look at it like a challenge. When challenge comes early, it's just better for you. I mean, you know, I have a lot of shares of challenge in my life, and you know, if I didn't have that challenge, I don't think I would ever able to trade or come in front of you and do all this kind of stuff. You know, at a young age, and so I look at this really a good thing, so that I can learn, and you know, it's been very, very difficult, but I can learn, and you know, so that I really suggest that this is not the time to, because everybody's like going, you know, everybody's getting slaughtered. Most people are. This is the market that, you know, it's difficult to swing trade. It's this market for more long-term traders and position traders, and so it has worked out well, you know, like, you know, worked out well for us because we're mostly position trading. So, you know, there's some, you know, some of the stocks or positions gotten stopped up, but a lot of stocks were able to salvage it. But it has been like just a lot of, you know, it has been a lot of that. I mean, like, you know, some of our position, LinkedIn was you know, we might have to close that out with just, you know, with the loss, and but they're like Lionsgate, we were able to salvage the General Mills, and also what was that, Pulte Group, that looked like we were gonna just completely lose it, and then we were able, you know, we threw that in for head and shoulder. So we're dealing with this market. It's just totally crazy. And Apple, obviously, one of our position that not doing well right now. We're in a dire situation. But you know, my mindset is always kind of like, if I lose it, then I lose. That's I gotta accept it. I think it gets hard when you cannot accept losing, right? When you cannot accept losing, then it starts to get to you emotionally and personally, and then you get angry. And then you get angry, you're bitter. When you're bitter, your life sucks. When your life sucks, you're depressed. When you're depressed, you cannot trade because you're not thinking logically. So I've been, you know, advising or recommending, you know, for even club members, that don't look at the market all day long. Just because this is what happens when you look at the market all day long. What happens is you want the market to do something, right? And then when you look at it in the morning, it's doing it a little bit, and then when it's not doing what you want it to do, it irritates you. What do you do is, don't look at the market during the daytime, especially when we're dealing with this volatile market. What you do is you look at the market at the end of the day when the market is closed. Why? Because now you just accept whatever you see. That's what it is. You cannot change it. There's no hope of changing it. Maybe tomorrow, but right now. But it's a human kind of thing. It's a humanistic way of hoping something to happen. So you sit there like you're watching a sports game or something. Like, come on, you know, that doesn't work in the market. And it's so, we've been working in such a volatile market. Like even looking at S&P 500, like it looked like we're gonna have like, you know, hammer and then bounce. We're gonna gap up and we have this huge move, and the next day, bang, gap down again, and then it goes up again, down again, up again, down again. And it's not fair for you to go through this emotional roller coaster and then your day is shitty because of that. You know what I mean? Well, thank you very, very much for Barbara. So I recommend not watching the market during the day, but just watch it at the end of the day. And then what you do is just accept it. And then, you know, same with any positions, you just willing to accept it. Let's say if my Apple trade doesn't work out, you'll know about it. I'm willing to show you what I'm doing with my journals and stuff. I'm ready to accept it. That's just part of the game. You know, it's just, you can't always win everything. So I think just understanding that mindset, I think it will help. Because I think if you're in a better mood, if your mind is clear, you can actually make better decisions instead of being emotional. And so I thought I would just kind of share that with you, and you're very, very welcome. So yeah, that's about it. So if you have any questions, you're always welcome to reach me, email me, or anything else. But enjoy your summer. Summer's almost over, and if you're stressed out, you don't go out there and look at it. You're alive, right? You're alive. You can eat. You have food and covering. Then you shall be content. And so that's how I look at the life. And you know, and if we can do that, then why should we let the market dictate if we should be happy or not? We should always be happy because we can able to feed ourselves. We're not homeless. You know what I mean? There are people doing so much worse than us. It's a blessing. You should just think of it as a blessing to be part of the market and play this game. That's how I always see it that way. And then if we can do it like that, and I think it would just be kind of a fun thing. We can do extra thing, not a major event in life. Like, oh my God, the market is gonna crash. My life is over. Oh my God, the Apple is gonna crash. My whole life is done. It's the end of the world. You see, when that happens, that's when things get very, very difficult for life and everything else. And any of those, if you're like that, I think it's time to quit stock market. I really think so. I even tell my members that if you don't have stomach for this, it's not for you. It really is not for you, because there's time where you have to realize certain thing is not for you. There is a time where you know it's your passion and you don't give up. You keep going. You know, there's times where I'll end with this. I used to love playing basketball and I sucked though. But I would be denial, like I'm good. But then I sucked. I go Lifetime Fitness, play basketball, black people, or even white people. I sucked. I just couldn't play it. I can't even get my shot. You know, one day I remember thinking, I sat in my gym, for the first time in my life, I sat in my gym, or the bench, I uttered this word. I said, you suck. You're not athletic, hey. You just gotta admit it. You can't, because I can't go pro, I can't make money out of this. You can't keep wasting your, because I was like practicing every night, but I sucked. I'm not an athletic guy. And for a guy to say that, it's difficult. For a guy, because they want to be athletic, they want to be known as somebody, you know what I'm saying? But something happened. As soon as I said that I wasn't good at, I sucked, and I wasn't athletic, I started looking for something else that I'm good at. I wasn't an athletic guy, I wasn't a sports guy, and I was looking for something else I was good at. And I realized I was good in business, I was good in details, I wasn't good at something else. And then I got into trading and everything else. I call trading mental sport. I'm really good at this. I love this game, and this is what I want to do for the rest of my life. You see, but it all started when I told myself, you suck. So, you know, true friends will tell you the truth. They'll tell you that you suck, and sometimes you need to hear it. You need to hear that you suck, and you need to admit it, you know. And so it just, that's life. Sometimes you're not good at something, but if you believe that this is in your passion, in your heart, then oh yeah, you don't give up. But for those of you listening, it ruined your life. You can't sleep. You're emotionally always distraught. You're just pissed off every day. You just can't even eat. You can't even hang out with your friends. And this market is ruining your life, ruining your marriage, or whatever, right? Stop it. Just quit. It's not for you. Find something else to do. No, seriously. Find something else. It's not worth it. It's not worth not being happy, not seeing the, you know, the birds in the air, or the sun, or the water, you know, the things that this world can offer. It's not worth it, you know. And that's, I don't know, that's how I would kind of look at it, and I thought I would just share that with you. I know some of you might think, like, who is this guy? What does he know about life? You know, I'm actually 34 years old. I always have to say this. People think that I'm 28 or 25, but I'm actually 34 years old, and I kind of think about a lot. So I read about like philosophy of life, and so it's just kind of, you know, something that I call myself life philosopher, and there's a lot of thoughts going on, and then I like to share that. You know, I like helping young adults, young guys from college and stuff like that too, talking about these things. So I thought I'll share that with you. Remember what we said last week? Steve Jobs, half of his wealth, gave doctor, you saved me, I'll give you half of my wealth, which is 5.5 billion. It's gone. So how much would you pay, or how much would you get for your eyes? How much would you ask for your legs, your arms, your heart, your health? Think about it. Would you give $1 million for your eyes? Would you give $1 billion for your heart, your health, your arms, your legs, your fingers? No. So everything we do is just very trivial. It's not a big thing. It's a trivial thing that we do, I think. But really, if we have health, we have friends and family. Oh man, that's blessing. We're billionaires if we can have a health. And I always try to look at it like that, and then I just want to live a happy, peaceful life, you know. But market is shenanigan. Always throws something at you. Every day there's something happening. There's always people shouting crazy stuff on TV, on Twitter, on StockTwits, on blog. They're always saying something. They want to get noticed. They want to get followed. They want to do some. I don't know what they're trying to do, but everybody's saying something. You know, everybody's doing something. You just gotta. I don't even listen to any of that stuff. I just want market to tell me if I'm wrong or not, and then that's it. So. Well, I'll end with this. Have a great night, and next week, if I have time, I'll do the live midweek update again, and then we'll look at the Apple and everything else. Have a good night, guys, and we'll talk soon.